Hi, it's Charles Kelly Money Tips. Today I have our mortgage advisor Miriam with us again today, and she's going to talk about some of the new rates that's come out since we've seen inflation fall. But first of all, I just wanted to briefly mention the autumn statement. This is it's kind of like a mini budget really that the Chancellor shares obviously in the autumn, and it might be interesting to see what's been going on there. Just run through the key highlights. Basically, he's been giving away some money. He's been reducing certain things. It's not quite clear how he's going to pay for it, but he's reducing national insurance, cut from 12% to 10%, affecting 27 million people. Class 2 and Class 4 national insurance will be abolished for Class 2 will be abolished for self-employed and reduced on Class 4. So self-employed should be £300 or £400 a year better off. Legal minimum wage going up to £11.44. So that will affect people on low pay. If you're an employer, maybe you're not happy about that. I don't know. I'll be interested to hear your comments. And pensions are going up. Universal credit or benefits are going up by 6.7%. Pensioners will get an 8.5% rise, or 8.3%, I think. But from landlords' point of view, local housing allowance rates, which determine the level of housing benefit and universal credit people receive and on paying rent in Britain, are to be unfrozen and increased. I don't get this to 30% of local rents, but that's what it says on this BBC. But it should more reflect local rents, and they'll certainly be unfrozen, because a lot of landlords in the southeast have found that it's not worth lending to people on benefits because the rents that they'll offer is so much lower. I mean, the last time I looked, they were offering about £1,400 for anything over a 3-bed house. It didn't matter if you had 4 bed, it was still the same rate. And you could easily get 1,700 and 1,800 then, and now you could probably get 2,000. So there's a big gap there. There'll be some funding to help businesses, business tax reduced, planning liberalisation a little bit. They keep talking about relaxing planning laws, but it's like they announce these things over and over again. I don't know how many more times they're going to announce that, but apparently he mentioned something about if you've got a house and you should be automatically able to split the house into 2 flats as long as it doesn't affect the outside of the building. So I think he's going to try and speed up planning from the local authority or council's point of view, and particularly with big infrastructure products. So that was just a little bit about the budget there. And obviously, we already know that inflation came down from 6.7 to 4.6. So that the government is saying we halved inflation from last year from 11%. Yeah, great. But I think that their policies helped to cause inflation, particularly when Rishi Sunak was the Chancellor. But that's another story. But they've halved inflation. So, Miriam, how has this affected mortgage rates on from your level on? Because we're always talking about macro rates and that sort of thing, but when it comes down to mortgages, which most people pay, how has it affected things?
So, increasing the base rate initially obviously increased mortgage rates. And increasing the base rate was one of the strategies the government used to try and bring down inflation. Now that inflation has decreased, from what I've been reading, there are still no plans as such to bring down the base rate yet. And I'm not sure if that will be done in the near future or not. As far as we know, at the last meeting, the base rate stayed the same.
Yeah.
And as of, I would say, probably about this year, mortgage interest rates have been reducing steadily. And for the first time in a long time, within the last year, really, we've been seeing rates coming down to now just under 5% with a lot of lenders.
Okay.
A lot of the high street lenders like your NatWest, Barclays, Nationwide, etc., offering rates just under 5%. Even specialist lenders such as Precise Mortgages offering 2-year fix from about 4.39%. So this is really great news.
Okay.
Obviously, it's not suitable for everybody, and it depends on the circumstances and whether they're eligible for the product. But the fact that we're seeing the decrease in mortgage interest rate is really promising, and hopefully it will continue to go down in the new year.
Are they for buy-to-lets, and are they 2 years or 5-year fixed rates? What would be the big difference between, say, a 2-year and a 5-year? Because
things around sort of 5-year fixed rates
would be lower. They've come out lower now, haven't they? They used to be higher, but now they're giving away 5-year fixed rates. lower rate, yeah, or higher rate. I can't remember now, but
5 years, there tend to be more 5 years at a slightly lower rate for people, so they can borrow the keep that rate for a longer period of time. Also, with 5 year rates, sometimes lenders tend to be more generous as well in their lending. So if you are falling short in affordability, rather than looking at a 2 year rate, if you don't have any plans of moving or making any changes to the mortgage, it might be worth looking at a 5 year deal at that point. Again, it depends. You don't know what's going to happen to interest rates, whether they'll fall further or whether they'll increase. There's always that risk. But choosing a 5 year might give you a slightly lower rate at the moment and also allow you to borrow a bit more potentially, depending on your circumstances.
and are the rates pretty similar between, say, a buy-to-let and a residential? I mean, some of these headline rates, you see it's for residential and it's you need a 40% deposit and that sort of thing. But if you were going for a typical buy-to-let, could you get less than 5%, or would it be maybe over 5% if you only had, say, a 25% deposit? I guess that would affect the
It's hard to
affordability
tell.
as
It
well.
kind of depends. Yeah, it depends on the loan to value as well, the sort of rates that you'll be eligible for. But there are even buy-to-let products are just under 5% now as well. So there's not a huge disparity between residential and buy-to-let. But overall, the rates across all products, across many lenders, are coming down, and it seems to be the trend.
Good news.
A lot of lenders are also introducing 3 year products onto the market as well.
Okay, 3 year products, right? Well, that's interesting.
3 year products because for some people, yeah, so for some people, 2 years might be a little bit too short term, but 5 years might be a little bit too long to be locked into. So 3 years gives them a time to secure a rate and then, but still review their mortgage again in the midterm and see where we're at with the interest rates at that point and hopefully move on to something more competitive at the time.
So for clients now coming out of a 2 year or a 5 year fixed rate, the future looks a bit more promising, I guess, because they're not going to be hit with such a higher rate, maybe a 6 or 7% rate. There might be 5%, which still seems high, but it seems a lot lower than when a year ago and you were facing much bigger rises. So hopefully it's getting
Relative because this time last year when rates had gone up to about 4%, everyone was very shocked, but now that rates are coming back under 5%, people are quite relieved. So it's all relative.
in your head.
If they don't do anything with the mortgage and they're coming off the rate, the follow-on rate is still about 6, 7, 8% potentially. If they fix it onto a deal, it can be around the 5% mark, maybe just under. Yeah, it's still a jump compared to what the rates were this time well, just before the budget last year. But any decrease in the interest rate is welcome. Yeah.
And are lenders prepared to lend? Are they keen to lend now? When I see them reducing rates, I always think, well, they need to lend now. Maybe their criteria will improve. Or have you noticed any more flexibility, or about the same?
Are always looking for ways to be able to lend and do business. Obviously, that's how they make their money as well. And after the budget last year, when interest rates shot up, a lot of products were taken off the market suddenly,
Yeah.
and banks weren't doing as much business as they were before because they wanted to see what was happening with the Bank of England base rate. And also, protect themselves against risk. But now, yeah, with the rates coming down, I think it's signaling that banks want to start doing business. They know they can't keep raising it up because otherwise there'll be no business to do. No one will be able to afford the housing. So the fact that they are bringing rates down, I think that's a good indication that they want the market to pick up again. And it has been, I think. I would say since the end of summer, it has been picking up. I've been getting more inquiries for purchases and for remortgages from
That's great.
clients.
So anybody who needs advice, or maybe they've got a rate expiring in the next 6 months, I guess you'd advise them to come and see you as soon as possible, because I think you can give them their options and maybe lock into a rate, right? Was that what you'd say?
So usually up to 6 months in advance now, we would say to speak to a mortgage advisor, have a look at your options. If your rate is most likely to go up, and if it does go up, it's good to know sooner rather than later sort of what that's going to be so you can plan your finances accordingly. If there are any better deals on the market now, we can secure that now in time for when your current deal ends, or if you need to sell the property, etc. It just gives you plenty of time to make the plans, so that you're fully ready to do what you need to do as soon as your current deal ends.
Okay, great. Well, thanks a lot. Is anything else you want to add to that, or is that really the news update for now? Anything you wanted to add?
That's from me from this side. I'm really hoping sort of next year the rates will continue to come down, and in the spring again. Christmas is usually quiet time in the mortgage world. No one's looking to buy houses really at that time of year. But in the spring, when I hope we'll get more buyers on the market looking to purchase properties. If the banks keep reducing the rates, and that's great for us.
Oh, fantastic. Okay, well, thanks very much, Miriam. And just one final thing before we go. If you need help with money, if you're struggling with money, I mean, the cost of living crisis is still there, despite the fact that inflation has gone down to 4.6%. It doesn't mean prices are going down. It just means they're not going up quite as fast. And in Parliament today, the shadow chancellor said there are 11 million people who only have 3 weeks worth of savings. So if they lose their job, they can only survive for 3 weeks. Now, you don't want to be in that position. So what I'd say to you is you need to learn how to manage your money. And I'm running a webinar this Wednesday, but also the following Wednesday, or the one after that. But you can register for them, and you'll get the latest one, which is unlocking financial freedom, showing you how to manage your money, and showing you how to build wealth for the future. It's not a get rich quick scheme, but it's first of all managing your money and then learning how to build wealth from there on. So do join me on that, and I'll put a link up to that. So how do people contact you? Do you want them to contact you through an email, for a website? What's the best way they could contact you, Miriam?
You can contact me via email. I'll provide you the email address. You can post it in the
Okay,
comment box below. And yeah, if anyone wants to get in touch for a chat, more than happy to speak.
great. Okay, well, thanks very much. And that's all for now. We'll see you again on the next podcast. But in the meantime, contact me if you want any advice, or contact Miriam if you need any mortgage advice. And do try and join me on that free webinar in either this Wednesday or the Wednesday after. Thanks very much. Bye for now.